We have a company in gold mining that for close to a decade took maximum advantage of the bear market that we had in gold, putting together a mineral bank, a portfolio that today comprises of close to 12 million ounces of gold in the measured and indicated category, 13 million ounces of gold in the inferred category. That same portfolio is underpinning a number of newly created royalties that we were able to form and place inside of Gold Royalty Corp,
yes,
which is a wholly owned subsidiary of gold mining.
What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Jay Martin, CEO of Cambridge House here, and today I'm sitting down with Amir Adnani, the founder and chairman of Goldmining Inc. Amir, it's good to see you.
Good to see you, Jay.
Okay, now I'm really excited to share this conversation with Amir, with you guys, because as I preach about all the time in my newsletter, I value people over everything else. And I actually get challenged on this quite frequently, especially when we're talking precious metals. If I'm speaking to an investor with a background in geology or a technical analyst, they tell me, Jay, you're missing some really important details by only looking at the leadership team. And they may not be wrong, but look, you have to play to your strengths, right? I run a conference company. I have conversations like this for a living. I know people. That's what I know, right? I'm not a geologist, not a technical analyst. I play to my strengths. That works very well for me. The reason I'm so excited to sit down with you today is because you're an entrepreneur in the precious metal, or the resource industry that I've looked up to and had a deep amount of respect for over a decade, right? I entered this industry 10 years ago, almost to the day. And I've known about you since then. You know, we got to know each other more recently than that, but I've watched your career. We have a very intelligent audience that watches these videos, but not everybody comes to our channel from a resource background. Yeah. We have a ton of investors that found us because we produce a lot of content in like the alternative technology investing sector. I'm super active in the health science industry. We talk about digital currencies and whatnot. So not everybody has the experience or exposure to gold. I want to talk about this a little bit, right? Just to open up the conversation and begin just by saying, why is it important for every investor, if you think this is true, to have exposure to gold in their portfolio today?
I think first you have to ask yourself, are you concerned about the response to the very important health crisis that we're having in the world with COVID? And the response from governments and central banks is to throw an unprecedented amount of money at the problem. And look, sure, I'm an entrepreneur, but I'm also a father, I'm a husband, I'm a son. I care about the human aspect of what's going on, and it's impacting all of us in terms of the immediate reaction we got to have to COVID. But at the same time, I also see and think about the young family that I have and the young kids that I have and ask myself, how are they going to pay for all of this down the road? How are you as an entrepreneur? How am I an entrepreneur? How are we going to pay for this incredible amount of just printing that's going on by governments and central banks to just tell people to stay at home and just mail them a check and to just print our way out of this? How are we going to deal with this down the road once we do find a vaccine and the health issue is behind us? We're going to have a much bigger economic issue in front of us.
Right.
And I think that creates almost like a structural shift in the investment thesis for gold, in the sense that it's no longer something that you got to be a gold bug to be interested in.
Yeah.
It now becomes almost a must-have. It's a must-have asset class in every portfolio to hedge against inflation, to hedge against the fact that we're going to have suppression of real rates and interest rates are going to be low for a long time to come, the debasement of basically fiat currencies, and the fact that, frankly, with the stock market at an all-time high, it's a bit of a decoupling with economic and corporate conditions not
100%.
being that strong. So how do you reconcile all of that? And as we can't control everything, but we can control what's in our portfolios.
Right.
And so that's why I think gold takes a completely different kind of position. This structural shift in the investment thesis that I mentioned, I think is what is what anyone that you're talking to that you just said might be watching this and thinking, why gold for the first time?
Yeah.
It really, I think, has changed in the last 90 days in a profound way that you and I, who've been following gold, who are bullish gold for other reasons, because of your past with Cambridge and my past, and there's a whole new set of reasons, I think, now that makes gold a universally important asset class to have exposures to. And that is a function of the environment we're in.
Yeah, right. And we're seeing that, right? You know, a year ago, just even a year ago, you weren't seeing mainstream financial media pundits talking about gold at all.
That's right.
Right. They are every day now, right? And I always, I wonder sometimes because of my background in Vancouver, in small cap, that I've always had a higher exposure to the gold market.
That's
I think
right.
probably a deeper understanding of why, right? But it's not endemic, right? And to understand, especially somebody our age, North American, to try to wrap your mind around the idea that a fiat currency can actually fail in some way is a pretty tough thing to understand or imagine, right?
Right.
But actually, I heard you share a story on a podcast recently where you talked about your family's personal experience with this exact scenario going back to the Iranian Revolution in 1978. Can you quickly share this for us?
Yeah, and I think those personal experiences do shape and help form a view on gold. And it also helps develop maybe, I don't want to say mistrust, but you start to question the decisions that governments and central banks and policymakers make. And when you come from a country like Iran, that's where I was born. And for me, North America has been home for most of my life, but that's where my family comes from. And so I've observed over the course of my life, this country just basically be destroyed from a standpoint of economic prosperity because of terrible decisions made by individuals. And so from a pure numbers point of view, when I was born, you could have been buying a US dollar for basically 7 Iranian riyals. So a 7-to-1 ratio to buy the US dollar.
Right.
And then you could have bought gold at that time, and gold would have cost you about $200 an ounce.
Okay.
All right, so today, if you're a young family in Iran, it's going to take you 20,000 of the local currency, the riyal, to buy $1.
Coming from 7 to 20,000.
Coming from 7 to 20,000. And then once you arrive at that $1, it's another $2,000 to get to 1 ounce of gold,
right.
Or $1,900, whatever the price is at the time when someone watches this. And that is an incredibly formative experience to really walk away and say, at no point should you sit back and assume that an elected official, and most elected officials in the free world today are experimenting with this notion of basically just printing our way out of a health crisis.
Now, to your statement about it's really just changed in 90 days, right?
Yeah.
And it had been a long road prior to that 90 days, right? Really, the end of 2011, gold fell off a cliff. It fell for a few years, and then it's been very sleepy ever since. It woke up amazingly fast, right?
Yeah.
And I mean from not just the price increase, 25% price increase or so, but also the media coverage, right? Like I said, every major media center is now talking about gold. Has that price appreciation and mainstream pickup occurred faster than you thought it would? Does it concern you at all, the speed of traction?
It doesn't concern me because in a way I think we should have seen the gold price rise already even before COVID happened.
Okay.
I kind of look back and say, hold on a second, let's look at what was going on before COVID. And what was going on was that we had an economy and a stock market that was at an all-time high, and we were towards the tail end of a decade of historically low rates. Let's not forget about that. And we're talking about the fact that every time the Fed in the US came to talk about increasing rates, even closer to historic levels of 4 to 5%, the market would have a taper tantrum. It could not handle the idea of a higher rate.
Yeah.
And so to me, that was a warning. If the economy is so robust and so strong, why can't we adjust rates back towards levels that were at historic levels and not at these historic lows? And so we're coming into the situation with COVID where there was already basically, the economy was really starting to slow down. There's only so much growth you can stimulate by keeping rates low. And now it just becomes a whole other ballgame, which it gets a bit out of hand. But to answer your question, no, I'm not surprised at all. And I think that in a way I would say we should have been here already. We should have seen higher gold prices. We should have been, before we got to $1,900 gold here recently in 2020, we were already, if you compared total US debt or debt to GDP ratio today versus 2011, the last time gold was at 1900,
Sure.
The numbers were higher today than in 2011, meaning we should have been at $1,900 gold already. The suppression of real rates has been going on and is now obviously going even deeper into negative territory. But we had trillions of dollars of negative yielding debt globally. It got as high as $17 trillion last year. That was before COVID.
Right.
So again, to answer your question, no, I'm not surprised by it. It doesn't concern me. Now, obviously, now that you have broader market participation than just the gold bugs, who knows where the new baseline for gold is going to be and where the price settles.
Absolutely.
I don't know that. But I'm not surprised by any of it. And I think we should have been at a new all-time high already before the numbers even became as bad as they are now in terms of the printing press and the trillions of dollars not seen last since World War II. I mean, it's incredible. But the velocity at which we got to the trillions of dollars of money that has been printed this time around
way faster.
happened in 90 days. World War II lasted years before we got to the end of World War II deficit that existed globally and the amount of debt that had been piled on.
Yes.
And by the way, we're not done. We're
not
still
done.
talking trillions of dollars being potentially introduced in form of new stimulus.
Absolutely. Okay, and that appreciation, you set yourself up, the gold price appreciation, you set yourself up very well for. So I want to talk about Goldmining Inc. That's why you're here today.
Sure.
That's what I want to share with you guys today. So you've been super busy during this bear market. And you know what strikes me about that is that, like I said, I entered this industry at the end of 2011. So the tail end of that last bull market, and then rode out the next 9 years of what you could call a gold bear market, right? Which I think was super fortunate as an entrepreneur to sort of cut my teeth in this industry during that time, because most people fled the sector, right? And anybody who stuck around, they were there because they meant business, right? They weren't there for a free ride. And you were super busy. I think you acquired 14 properties during that time. But it was a lengthy market, 8, 9, 10 years. What gave you the conviction to be so aggressive acquiring gold properties in one of the worst gold bear markets we've ever seen in our lifetime?
Well, I mean, first of all, I think part of it is maybe just style, personality, and mindset. I think you have to have definitely a framework of thinking that you believe in, and you have the strongest level of conviction possible. And then you must attract like-minded people, because business is not a single person effort. It's a team effort.
Right.
And so for me, clearly, and I've shown this throughout my career in the resources. I've done it in uranium. I've done it in gold. I talk about the 2 yellow metals. I believe that, as the saying goes, crisis equals opportunities. And bear markets are an incredible opportunity to be active, and I've put my money where my mouth is and done exactly that. So we've, and the group that we created in terms of both the team and the shareholders at Goldmining, people that you know very well and have spoken at your conferences. You look at individuals like Marin Katusa or Rick Rule or Doug Casey. These are no strangers to your conferences, videos and interviews that you've done. And these are the type of like-minded people that we were able to attract very early on and say, guys, we want to be contrarian, we're going to be counter-cyclical, and we're going to go acquire gold projects when no one wants them.
Right.
And I joke and say, look, it's like, begging your wife instead of buying the Christmas decorations in December and paying full price, buy them in January, buy them in July when no one wants Christmas decorations. It's no different than that. It's not rocket science.
Right.
And I think for those people watching, and that are new to the resource sector is one of the oldest sectors in the world. It's a cyclical business, and if you want to create wealth, you got to be counter-cyclical. So we just had a lot of conviction. That was our frame of mind. We were happy to be acquiring projects when no one wanted them, and you could acquire them for 10 cents on the dollar.
Right.
But it's easier said than done, because now looking back, it's been 9 years. Those were tough 9 years. Think about it, year in and year out, and year in and year out before you get to 9 years. And it was not fun.
Yeah.
But again, if you have conviction, you have the right backers, and you have the right team who's willing to also commit, then you can execute and realize this. So to put it in perspective, we made all of our acquisitions on average when gold was much closer to $1,000 an ounce.
Than 2.
Versus 2.
Yeah.
Think about the delta or the difference there and how much of a difference that can make.
Yeah, if somebody were to try and build this portfolio today at these gold prices.
Impossible.
Right.
It's impossible. Doesn't matter how.
Hundreds of millions more.
And not only will the valuation be significantly higher, but also because there's a structural and physical shortages in our business today. The total global resources of gold in the ground are 50% lower than a decade ago. Because the decade that we ended up having in a bear market for gold meant major producers were underinvesting in exploration and development.
Right.
And they were focused on just reducing debt and lowering their debt profile, getting lean and mean. And that's all good, and they returned a lot of capital back to shareholders. That's all good. But it came at an expense. And the expense was that there was underinvestment in exploration and development. So as a result, today, to do what we did over the last 9 years, it would just not, there's not much left to buy. There's not much left in terms of resources that you can acquire and develop. And any project that was shovel ready has already been acquired in some form of mergers and acquisition transaction.
Right.
And I really think the next phase of this bull market that we're in for gold is going to be all about rebuilding the pipeline. This pipeline of projects and resources that is now so thin, it's starved for nutrition.
Right.
It's got to get full again.
Okay.
And that's going to come with investment. And that's where, if you have the goods, if you own the properties, you have the resources that we have, that's where I think we can excel in this environment.
Okay. And so 14 properties, and one, I believe, as recently as March, right? Almaden?
Yeah.
Right. So you've been busy. Now, we can't jump into all of them. It would take too long. But I do want to give an example when you talk about buying these properties in the bear market and paying those contrarian prices. I want to talk about T-Tribi, right?
Sure.
Which you purchased. And so what did you pay for this property?
T-Tribi is a project that we acquired in 2016. And it's a project that we paid $15 million for in stock. And so I think at the time our share price was about $3. And so we issued 5 million shares.
Okay.
So first of all, the dilution was very small for our company at the time. So it was about 5% dilution. I think we had about 100 million shares outstanding at the time.
Okay.
But the asset that we acquired for $15 million in stock was the flagship asset of a public company called Sunward Resources.
Yeah.
And Sunward in 2011 timeframe had a $350 million market cap, was its peak market cap.
Okay, that's like a key bullet point.
That's a key bullet point.
Because that was the only asset that company held, right?
Key asset, only asset, number one. Number two, we paid $15 million, 1.5 in stock. And that same asset was valued at $350 million market cap, and had as its biggest investor Tom Kaplan, who I think has also maybe been at your shows, or is a billionaire resource investor and backer of those projects. And it's in Colombia, and a country that's seeing a total reemergence of gold exploration and mining. And back in 2010, 2011, there was not an operating gold mine in Colombia. Today there is, with the Buritica gold mine that's gone into production just about 40 kilometers north of where T-Tribi is. And it was actually acquired in an all-cash deal by China's Zijin Mining for $1.4 billion this year.
Right.
Not in 2010 when this asset was worth $350 million. And it's interesting that one asset, T-Tribi, used to be the flagship asset of a company that had a higher market cap than our entire market cap today at Goldmining, which is another very interesting data point.
Yes.
But again, here you have an example in T-Tribi where I feel, first of all, we did a win-win deal, because the company that we acquired it from, that had the asset ultimately, wanted to focus on another property. It was 2016 timeframe. They didn't want to be in Colombia. It was a win-win deal. But for us, it demonstrates the type of transactions and value we were able to create at the bottom of the cycle, and what the same assets were worth in a bull market environment.
Right.
And today, not only do we own that asset, T-Tribi, 100%, but that asset didn't have any pre-existing royalties on it. Mm-hmm. And so we were able to also capture a royalty on T-Tribi, the same asset that had this market cap and backing. Also for us, we can now extract two forms of value from it.
Yes.
We own the asset 100%, and we can create a 2% royalty and hold that royalty in an exciting new vehicle that we've created that we can talk about.
Yeah.
And that gives our shareholders two distinct vehicles.
Yes.
To benefit from the exact same asset that you acquired at the bottom of the cycle.
Right. Okay, I want to talk about that exciting new vehicle. So just to restate that, right? This was the only asset of a company called Sunward Resources, valued at $335 million in the peak at the last gold market. Your market cap as of today is around $300 million. It's one of 14 assets that you hold.
That's right.
Okay, so let's talk about this new vehicle, Gold Royalty Corp.
Yeah, so exactly. And this is an exciting development for us. Really, it comes down to a fundamental point. The fundamental point is that we've spent close to a decade acquiring projects and building this large mineral bank. and now we were in a bear market for gold. Now we're in a bull market for gold. And if you're a shareholder of Goldmining, if you're listening to this conversation right now, you're saying, all right, how are we going to harvest? How are we going to benefit from all of this? And so this is where we got to make sure we get maximum return and value for our shareholders. So we looked at it very creatively, and we sat down and thought, before we just advance the portfolio and de-risk these assets through organic growth and potential eventually potential sale and M&A, because again, there's going to be a lot of interest in resource stage projects.
Yeah.
We observed that in the gold sector today, some of the best performing companies trading with the best multiples are the royalty and streaming companies in the precious metal space.
Sure.
And they trade at higher market multiples than the developers and producers do. But in order to create a royalty company, you need either a big checkbook, or you need to have a lot of projects. We didn't want to come in and compete with the bigger players like Franco-Nevada or Royal Gold. Instead, we had a big advantage. We'd been buying gold assets for a decade, and we had 14 of them.
Yeah.
So we announced the formation of Gold Royalty Corp, and we created 14 new royalties on our existing portfolio. This is another thing you couldn't do today. You couldn't compete overnight with all the big players in the royalty space for 14 royalties. And so we took the inherent advantage that we have of being an asset-rich company. And we said, let's create two distinct vehicles that our shareholders will benefit from. A royalty is a wonderful long-term way for getting the benefit from this portfolio. As this portfolio develops and eventually gets into production, the royalties are a great way to capture that potential. But at the same time, it doesn't take anything away from our existing value and shareholders, because Gold Royalty Corp is a wholly owned subsidiary of Goldmining.
Yes, right.
And so this creates, in my opinion, and I'd be curious to see what you think of this, I don't know of any other junior company that's pre-production that offers ownership of 14 projects and as many resources as we have, the 12 million ounces of measured and indicated and 13 million ounces of inferred.
Yeah.
Coupled with a gold royalty vehicle inside of it. And our plan is to look at the best ways of monetizing gold royalty, whether that's a spin out or an IPO.
Yeah.
And we've taken a step in that direction very recently with a very high profile appointment.
Okay, let's talk about that.
Let's talk about that.
As you guys know, once again, I'm all about the people, and this is maybe the most exciting headline of the last month. So who's the new CEO of Gold Royalty Corp?
Well, look, I think we definitely wanted to demonstrate that what we're doing with Gold Royalty and our plans to unlock the maximum value possible for Goldmining shareholders was also being backed by the addition of the right people. That's part of our harvesting strategy of this portfolio. Got to increase and expand your human capital. And so, and as always, and again, at Uranium Energy, we've done the same thing. The focus always has to be on the people, what you're talking about. So we've announced the appointment of David Garofalo as the chairman and CEO of our wholly owned entity, Gold Royalty Corp. David was the CEO of Goldcorp, the major gold producer that merged with Newmont last year to create the world's leading gold producer in Newmont.
I think he's one of the top 5 active names in the mining business.
Really is, and frankly, before that, he was the CEO of Hudbay, another metals producer, and prior to that, the CFO of Agnico Eagle.
Yeah.
So truly one of the top gold executives in North America, in the world. And David hasn't taken on the CEO role of any other company since merging Goldcorp with Newmont.
Yeah.
So it's an incredible vote of confidence for both Goldmining and Gold Royalty to attract a talent of his caliber with his track record. He's also joined the advisory board of Goldmining. And so it's a dual approach where, as we now look to develop our portfolio and unlock maximum value for the portfolio, to have individuals like him. For David, throughout his career, he's been involved with, and under his leadership, 12 projects have gone from resource stage, where our projects are, to production, to becoming producing mines.
Yeah.
So to start to build a team that is fully capable and understands at the highest levels how you advance, combined with our existing team and skills and resources, and also take the helm at Gold Royalty. Because now when you look at this, and if you're a Goldmining shareholder, you must be thinking, wow, this creation of Gold Royalty is now truly being driven forward
100%
by the best people possible, and we'll have more news on this and show that we're really building a standalone, dedicated team for Gold Royalty.
Of course.
That can become its own entity, of which Goldmining would be the largest shareholder.
And that was my first thought when I read that headline, is that he's not taking that seat unless there's something big coming. And I don't know how much you can talk about. I guess there's news coming, so we'll have to wait for it, right? But obviously it's not a small decision. Okay, so I want to get to your shareholder base a little bit because it's one of the first things that I always look at. I want to see who wrote a check before I do, right? Who else is already in there with skin in the game? And you mentioned a couple names earlier, but why don't you share some of your more significant shareholders with us?
Well, I mean, first of all, I think our shareholder base today is a function of both companies and organizations that have written a check, number one. Number two, have taken shares in our company as part of our M&A transactions where we acquired another company, and large shareholders on the other side said, we'll take stock in Goldmining, and have become long-term holders that way.
Yeah.
And you got to really pay tribute, and I say use the word tribute, to some of our holders that have been there for practically the entire existence of this company. And that's a decade. And I'm honored by that, because there's one thing to call someone a long-term shareholder, but it's another thing when they've been there for 10 years.
100%.
And to have that kind of backing, those types of relationships, you're lucky, I think, as an entrepreneur to be in a position to have those kinds of backers. And I consider myself and my team really fortunate and lucky to have attracted patient holders. But look, you look at, for example, Brazil Invest. And you can look them up on Wikipedia, on Google. It's one of the oldest merchant banks, investment firms in Latin America. Mario Garnero, who's the founder and president and CEO of Brazil Invest, he was one of the early founders and partners of mine in this company, has joined the board. Brazil Invest has been a major shareholder from the beginning.
Of Goldmining?
Correct. And Mario Bernardo Garnero is also on the board of directors of Goldmining to this day, based in Sao Paulo.
Got it.
Number one. Number two, you look at the KCR fund, which was initially founded by Doug Casey, Rick Rule, and of course Marin Katusa. And Marin, both personally and with this fund, has been a backer from the very beginning, along with Rick at also Sprott and the whole Sprott organization, which are fantastic resource investors to have on board.
Yeah.
You look at some of the big institutional investors we have on the registry, Ruffer Gold, which is one of the biggest gold funds in the world out of London, Extract Capital out of New York. I Am Gold. I Am Gold is about a $3 billion market cap gold producer. I apologize in advance if I got the market cap wrong. Maybe it's higher than that. But it's a fantastic holder to have. They were the largest shareholders of Belhaven, one of the public companies that we acquired as part of our consolidation back in 2016. They looked at our strategy, I Am Gold. They said, we love what you guys are doing. And they took stock in our company through that transaction and are still holders of our company. So it's a holder list that I can really speak to by saying that they've either been there with capital invested for a long time or have come on board by taking stock in our company because they believed in our roll-up strategy, in our mineral bank vision that we had. And look, finally, last but not least, insiders. You know, I'm personally the largest individual shareholder in the company. Have invested my own family's capital into this, putting my money where my mouth is. Insiders in the company have significant ownership beyond just myself and the entire insider group that we have. And so again, all of that is necessary, right? Insiders have to have skin in the game. You need institutional owners and many private investors. I mean, I take great pleasure, as you probably know and have seen, when we attend your conferences, pre-COVID, when we can interact and shake hands and be there. You know, our booth is always very busy. Yep. And many of the individual investors who attend your conferences, for us, those conferences are like a shareholder meeting or investor meeting where your existing shareholders come by the booth. We spend a ton of time with them all the time answering questions. And there's, I think, tens of thousands of individual shareholders that are part of this. So as much as you want me to name some of the larger holders,
sure.
Got to recognize that we've got a really fantastic group of individual holders as well that have been there for the journey, many of them also for a long time.
Right. Probably prior to Goldmining, right?
Absolutely.
Right, because this is not your first rodeo.
That's right, yeah.
Okay, awesome. So look, thanks so much for sitting down with me. I really wanted you guys to hear from Amir. As you know, I preach all the time in my newsletter. It's not just the Pareto's 80-20. It's 10% of the industry delivers 90% of the returns. As an investor, Amir, I think, is an excellent steward of my capital.
Thank you.
It's awesome sitting down with you today. If you subscribe to my newsletter, you saw the in-depth report we published on gold mining earlier this week. If you're not a subscriber, there's a pinned comment right beneath this video where you can do so and get the full in-depth report of gold mining. Okay, thank you.